In this video, we're going to look at the parameters and the filters that we look at deciding whether we want to take the opening drive trade. Stay tuned. Hey guys, a very warm welcome to you. So part 2 here, we are discussing the filters that we look at to see if potentially we want to take the opening drive trade. And as a reminder, the opening drive trade is a momentum in one direction, a supply-demand imbalance, a push, a pullback. We're looking for a continuation in the direction of the momentum. All right, so just going to bring these in from a text file. If you go back and check the previous video, you'll see in the PowerPoint we looked about some of the filters that we're looking at kind of qualifying the trade. The first thing we're looking for is the gap. How large is the gap? Where is its position? What was the previous day's action and what caused it? So let's look at this Dow Jones chart here. Pick the day at random, just scanning through and finding something that looks reasonably interesting just to prove the point. Again, I'm not cherry picking as such, but there's just picking something that's got a reasonable attributes and giving us a filter that's going to work. So what are we looking for? We're looking for the gap. First thing to point out, guys, is that listen, we are looking at the full 24-hour session here. So the close for the Dow is at 9 o'clock and the Dow opens again at 2:30. So it's the cash session we're trading. This whole thing is based around trading the cash session. Okay, so the first thing we're going to do is we're going to look and we're going to see how large is the gap. And we can look in here and I'm going to zoom in. This is a 15-minute chart of the Dow cash or synthetic cash. It's probably based on a CFD with a trading view. And we can see, okay, we're opening up around 2100, give or take, 21,800, should I say. And we closed the cash session around what were we around 21,710, so about a 90-point gap, give or take. The official close difference is going to be different, so immediately we can say that's a pretty decent gap, right? How large is the gap? 90 points, 100 points. And where is its position? So what do I mean by where is its position? We need to look now and say, okay, where is its position relative to the previous day's action? Right, let's have a look at the previous day. So we get our pen out, we can see the previous day here was the open was around 2:30, so it's around here, and there was the previous day. So the high was kind of here, the low was here, the close was here, and now we're looking like we're gapping above the prior day's high. Interesting. So we're not only just gapping up, we're gapping out of the range. So if we're above the prior day's high or below the prior day's low, that becomes a little bit more of a significant development, something that becomes a little bit more interesting, right? Because it's not just within the range. People are a little bit potentially trapped. Institutions are revaluing this. Something's happening that's causing the price to be readjusted so much, especially when we're talking about an index as opposed to an individual stock, that's gapping out of the prior day's accepted value, if that kind of makes sense. So where's the position? In this case, we're above the prior day's high. So if we're above the prior day's high or below the prior day's low, this gives us more weight to this opening drive trade. What was the previous day's action? Okay, so let's look at the previous day. We had a kind of not a massive range on us. Where are we? Let's get our pen out, crosshairs out and see where we were. So in the cash session from 2:30 up till 9 o'clock, doesn't look like a massive range, does it? It looks like we kind of had a 120-point range, which is reasonably interesting, but it's not that exciting. But what's more exciting is if we go back, and again, always putting things into perspective, what the hell's gone on. Look, let's go back and see 3 days ago, we've had a real decent range. We've had a push down lower. We've had 2 days of consolidation. We've had the prior day pushed us to lows, new lows, but we closed kind of at highs of the day. Now we're starting to get a framework here, aren't we? We're starting to say, listen, bears are in control. Tried to push it to lows, but now we've closed back up. And now today, we're gapping back above not only the prior day's high, we can now put it into perspective as well with the last few days and say, actually, we're gapping above some pretty decent resistance. Let's have a look. This is getting a bit more interesting. So we're starting to tick off the filters now. How large is the gap? Pretty large. Where's the position? Above prior day's high, pretty good, and above a couple of days high ago. We're just putting in all the price action that we need to make an informed decision. What caused it? I don't know by looking at the chart what actually caused it, whether we had some news, whether we've had something. it could be relevant, it could not be. If it's a stock, then earnings are obviously going to be important, that we want to know if earnings caused it or not. If it's an index, maybe it's going to be some sort of news or data, or maybe it's just market action. Doesn't necessarily matter so much. Let's move on to the next section of the filter, which is the overnight range. So four things I'm looking at is the size relative to normal. So let's look at the actual overnight range. What do I mean by the overnight range? The overnight range is the period from the close, yesterday's close, cash session close, all the way up to the cash session open. Okay, so for US that's going to be 9:15ish all the way up to, well, cash session shuts at 9, the future shut at 9:15, but 9:15 around that, call it 9 if you want to, 9 o'clock up till 2:30 the next day. So that whole overnight session is what I call the overnight session, and for the DAX it would be when the cash session closes at 4:30 up till the actual cash session opens at 8 o'clock, that kind of thing. That's what I'm considering the overnight session. So we're looking at the size, the range size, so the high minus the low. So what was the range? Approximately, we say here we've got, it's reasonable because actually the low happened to be the previous day's close, so it's about the same as the gap, is it's about 100 points. If we'd have kind of pushed lower and then pushed higher and it was 200 point range, we'd note that down. The gap would still be 100 points from close to open, but the range would be different. But in this case the range is pretty good. It's about 100 point range, decent enough range. Okay, what else do we want to look? Highs and lows. So where were the highs and lows put in? Again, this is going to give us a little bit of a clue of who's in control. So let's move that out of the way so we can see what's going on. And let's have a little look. We have the lows running, overnight lows are put in about 11 o'clock in the morning UK time, and that really didn't go below the previous day's close, so we haven't really breached that level. So bulls, again, this is kind of giving a little bit more weighting for the bullish idea. We've gapped up, decent range, the lows weren't that low. Where were the highs? Let's look at the highs and lows. So we're looking at 2:30 open. We're actually opening right at the highs. We've taken out that sort of 6 o'clock in the morning high. We're opening right above that. So this is kind of, we've moved, get on to open relative to high or low. So where's the open, the current open, going to be compared to the high or low? Right at the highs, well above the highs. A little bit of a drive coming into the opening bell. This is more weight for the bulls, right? The chart shape, what I mean by that, okay, it's a bit broad by that, but in other words, have we kind of done this? We've just chopped around a little bit. Have we, in this case, have we sort of tested lows, rejected them and opening near highs, giving a little bit more weight into the bulls? Have we rejected highs early on and are opening kind of in the middle, and we've still got that overnight high to aim for? This is just putting things into perspective and seeing exactly potentially what might happen. And just to reiterate the point, guys, the reason we're doing this is we're kind of adding not only a filter to say, hey, might we potentially see momentum? Might we potentially see that trade setting up that we're looking for, that drive, that pause, that continuation? And these are the kind of things that I look for to give us an idea that this may happen. So the gap, looking at how big the gap is, where is it? Look at the prior day's range, where is it in relation to that? We talked about that overnight range as well. What happened overnight? How have people been positioned overnight? The size of the range, is it massive, is it small? Where's the high, where's the low? How's that in relation to the previous day? The shape of the chart, is it rejected a level and come back? Has it been choppy, or in the middle of the range? Where's the open going to be compared to that high or low of the range? In the middle, at the extremes, where's it going to be? And then we can start to put together a little bit more of a picture. Alright guys, stay tuned for part 3, where we're talking about getting involved in the trade and the triggers that we need to once we've done these filters to actually execute the trade and the rules of the strategy. Take care.